Hi there, it's Bill with Smart Trade, Sunday, July 25th, late afternoon, and going to take a quick look at the S&P cash as well as a variety of other markets here and try to get a feel to see if our zigzag is still intact. One thing to look at is the relationship, again, of the two B waves, and one concern that I've had is that since we are obviously extending this second B, the red B, as I've got it labeled here, is taking a lot longer than the first B wave in the double zigzag scenario. So caused a little bit of a concern, and certainly it's a possibility that the count is wrong, and I'll discuss that a little bit later. But one thing to look at too is the relationship of the two A waves and that parallel channel. Let's draw indeed a new parallel channel. Again, all I did is connected the bottom of the two A waves here, and using a parallel channel off that, I'm connecting to the top of the previous B wave, and then I'm going to extend that channel to the right. As you can see, that channel actually is intersecting almost precisely with where we topped out on Friday. Now, we could go a little bit higher. It's classic Elliott to have a little throw over on a trend channel, so that's certainly a possibility. And also to take note of here is we've got a whole series of closes that occurred around S&P, let's see, around S&P 1115, and even on the way down we have one at 1113. So that resistance on a closing basis is, perhaps about 10 points or so, maybe a little bit more above Friday's close. So let's watch that zone. And finally, let's take a look at the hourly. And on the hourly, there are a couple of things to take note of. The possibility that we have a diagonal triangle in the C wave position here. You can count out 1, 2, 3, 4. We've got a little bit of overlap on 4 and 1, which is classic in a diagonal triangle. If it is a diagonal triangle, ideally it'll go a little bit higher, and that fits rather nicely with those targets, again, up towards 1110 or so. Additionally, let's do a little Fibonacci work here, and if we measure the length of A up and then add that to the bottom of B, we have 1109.74 approximately as a 61.8 ratio of A up. And typically, if they don't tend towards equality, the relationship between A and C will tend towards the Fibonacci ratio. So 0.618 is the next one on the agenda. We'll see. It obviously, again, could be something else. Also, just to take note of, and I won't show you the calculation, but that same area, 50% of this entire decline also comes in around that area, around the 1110, 1111 area. So we have a cluster of closes, Fibonacci ratios, trend lines, and so on and so forth, somewhere between, let's say, 1102 and up to about 1115. Probably the middle of that range, maybe 1106, 1110 is the more ideal area to watch if indeed we're going to keel over on a diagonal triangle C wave here, terminating B of our double zigzag. Some folks are saying, and certainly this is a possibility, that this is actually a C wave of 2 going back up. Now typically, if that's the case, we would relate by the Fibonacci ratio to the A wave back up. That targets about the 1158 area. So a pretty good run up from here. There is also resistance up in there. That's the top of the previous B wave. And also we could count this perhaps a different way. We could count our zigzag somewhat differently and call this ABC. And then we'll have ABCX coming up here to around that 1158, 1160 area. But let's take it one step at a time. At this point, again, we're right at that parallel channel. We're right at that 61%, 61.8% of this previous swing, and we've got volume divergences. I think I failed to mention, actually, we have breadth divergences. Let's see if that continues on Monday. That's one of the keys to watch. If breadth were to make new highs, if we were to get say over 2,600 advances at some point, or certainly on the close on Monday, I would be concerned that in fact we're going quite a bit higher. But again, as always, let's take it one step at a time. Also, I'd like to take a look at, let's look here at the previous high. You'll notice obviously we've taken that out, the highs from around the 1099 area back on the 13th, 14th, and 15th of July. We've moved higher on the S&P, but let's look at, for example, Google, and you'll see we're actually below that peak, even after this rally. Google tends to lead. The fact that it's not confirming that high is a bit of a concern. Obviously, it can fall through and catch up, but at this point, we have a bit of a divergence and non-confirmation there. Let's also look at Amazon. Amazon came back after gapping down, but it too is below its previous peak, and that's a bearish divergence as well. Let's look at Bank of America. Bank of America well below that peak. Again, these are major stocks and major non-confirmations, so personally I would be concerned with that. Obviously I'm cherry picking these to an extent to make my point, but here's Intel again. Here's the peak on the 14th, and to this point we're at lower peaks. In fact, we didn't even take out the previous day's high in Intel on Friday. And finally, so I'm not totally cherry picking, let's take a look at Caterpillar, CAT. And Caterpillar, as probably most everybody knows, is the world's largest manufacturer of construction and mining equipment. Pretty good indicator of the overall economy. Now, obviously, Caterpillar did take out that previous peak. That said, to my way of thinking, this entire rally looks corrective. Also, though, the previous decline looks corrective. The implication of that is that indeed Caterpillar's got a leg down coming up here, but that leg down is not going to turn into a huge crash. And this is something important to take a look at. The basic end of the world scenario where we're going to Dow 40, which is very, very popular on YouTube and with Robert Prechter and a whole variety of people. Some people don't even have the data going back to the 30s, but they're still basically jumping on the bandwagon of that count. And they're using short-term data to come up with this long-term count, but that's a whole nother issue. But let's look at Caterpillar here on the weekly chart, and to my way of thinking on the weekly, this is a classic impulse wave to the upside. Now, individual stocks do not work as well with Elliott wave, but it is interesting sometimes to take note. And again, to my way of thinking, you've got a classic 1, 2, 3. 3 is extended relative to 1, and it's also about 1.618, the classic Fibonacci ratio relative to wave 1 up. Moreover, the fifth wave is similar in magnitude to wave 1. Perhaps just a little bit longer, but you've got tending towards equality in waves 1 and 5, an extended third wave. Looks impulsive. That said, also the decline off the highs looks corrective, and perhaps we're forming a flat, in Caterpillar, which would bring us down perhaps to test the lower end of the previous fourth wave, and that comes in somewhere around the 50-70, 50-50 area. But again, we're getting a little ahead of ourselves here. Let's see how it pans out. But again, to my way of thinking, Caterpillar, probably a good indicator of the overall health of the economy, construction and mining and what have you. Not looking like it's ready to crash, looking like it perhaps can come down, but should be coming down in a corrective rather than impulsive fashion off of the highs earlier this year. Anyway, that's about it for now. Overall, the next place to look is perhaps 4 or 5 points higher, basis the S&P, maybe a little higher than that. And let's, in fact, go back just very quickly. We'll look at the spiders, and let's bring up the daily chart. Basically, my count will be broken if we take out the top of X. In other words, this idea that we've got an ABC X, A, and that this rally is B. That'll be broken if we take out the top of X. Basis the spiders, that's 113.20, and basis the S&P cash, that high is 1131.23. In the meantime, let's look for that peak again, somewhere between maybe 1105 and 1115, preferably in the lower to middle end of that range. And again, the breadth ratios are key here. If the advanced decline line gets back up over, the advances get back up over 2600, I'm probably wrong, and we're probably going to take out that top of that X wave and perhaps go up to about 1150, 1158, 1160, somewhere in that zone in a larger corrective pattern. Anyway, thanks for watching. Have a great week ahead.